There's some major shifts going on in the market right now, and I'm going to talk about exactly where I think we're headed in the next 1 to 2 weeks. I'm also going to talk about 3 stocks I purchased this week, 1 LEAPS call option position that I put on, and another LEAPS call option position I will be putting on next week. So let's go ahead and dive into it. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. Now, let's take a look at the account. As you can see, we're kind of hovering right there near all-time highs. And if you do want to see me hit my 8-figure goal and follow along that journey, please click that subscribe button down below. And if you get any value out of this video, make sure to hit the thumbs up button. I would greatly appreciate that. And I appreciate you being here. So let's go ahead and dive into the realized gain loss for documentation purposes. I like to do this at the end of each month and kind of showcase exactly how we did for the month. So for this current month, I'm up 53K, which is about a 4.3% return on the portfolio, which is great. That I'm hitting my goals, but obviously results vary month to month, and obviously results vary based on account size. So not a bad month for me, but I'm not the only one doing it. As you can see here in my private mastermind, Options Trading University, we have clients that share their inspiration, and I wanted to showcase a couple clients here that showcased their inspiration yesterday. Here, Chad. Pretty nice inspiration here. It was wonderful to see, and it's great to see clients, sharing that with the group because, it inspires us all. So nice to see that. If you do want access to my Ryan's Trades channel and my LEAPS entries and exits right here, that'll be at the top of the description down below. I also do give away free trade ideas on my Instagram and my free newsletter. So be sure to be subscribed to both of those. They're both free. So let's go ahead and dive into it. U.S. economic calendar. So next week, there may be some volatility. I think we're going to be definitely a little choppy in the markets here. U.S. unemployment rate comes out on Friday. So that's going to be the big one that I'm really looking out for. And then this week, okay, we had a few things come out. Now, the big one for me was GDP, okay? GDP came in at a surprise of 3.8% growth. So that's actually showing that the US economy is very strong. So that's good for the markets. That's what we want to see. Initial jobless claims actually came in less than expected, but this data right here being a little bit on the hotter side shifted things with the interest rate cuts. So if you go to the CME FedWatch tool, which I look at every week, it's basically the futures that tell us if there's going to be a rate cut or not. October, we're pricing in a rate cut, 89% probability, so very high probabilities there. Now, December changed, okay? These probabilities were much higher in the 80s. I think even in the 90s at one point, we were going to get 2 cuts this year, 2 more cuts. But it looks like potentially that rate cut will be pushed out to January. Now, that did shift the markets a little bit, right? So the markets expected 2 rate cuts this year, and potentially it may just be 1, and then 1 more in January, which is not bad. That's not a bad thing, but the market obviously doesn't like surprises. So this week we saw a little bit of volatility, had a nice baby pullback here. Let's measure this pullback here on QQQ, which tracks the NASDAQ 100. Yeah, we had a 2.3% pullback, so nothing substantial. But this green arrow right here, okay, towards the end of October, we do see a lot of earnings coming up, okay? And I'm gonna talk about some stocks that I'm purchasing into earnings. And I think until then, we will be kind of in choppy mode. So let me go ahead and draw out what I think is going to go on here. I think potentially Monday we might have an up day, okay? We might even double top here and try to, push this this resistance zone at 603, and then we might bounce back down and head a little bit lower. So I think we're going to be choppy here up until earnings, and I think earnings is what could bring us to new levels on QQQ, especially if the Mag 7 companies are reporting good earnings, lots of companies are reporting good earnings. That's when I think we could shoot up to the 610, maybe even 620, 630 area on QQQ. So that's kind of the expectation here, is that we're going to be consolidating, which is extremely healthy for the markets. We need consolidation to happen. It's not good if we keep going up to new all-time highs every single week, because that means on the downside, there's a lot more risk, and a potential 10% 12%, maybe even 15% correction would not be out of the cards. But since we are starting to consolidate here, I think maybe a more of a 5 to 7% pullback would be likely. And, if we do that next week, based off of, maybe the unemployment report comes in a little worse than expected, maybe we head down a good 3, maybe even 5%. Maybe we head even lower than this line right here. So maybe down to the 570 area on QQQ, but I'm not really expecting that. So, right now is kind of a stock picker's market. So when we consolidate like this, that's when people are starting to rotate out of the winning stocks, going into some of these stocks that have been depressed for a while and buying those up. So there's definitely some opportunity. You just have to be on the lookout for the discounts. And one of the stocks that I bought LEAPS on today is one of those stocks. I'm going to show you exactly which one it is. Okay. So great opportunity here. VIX is in the 15s, kind of dropped off a cliff today. We were up in the high 16s, even pushing 17 at the beginning of the day. And now we're in the mid 15s. So, fear could really start subsiding here. I guess we'll just see going into next week. Obviously, I'm following my VIX cash allocation rules. Let's take a look at those. If we take a look at the VIX cash allocation levels, we're between 15 and 20. So there's slight fear still in the market. So essentially, I could have 20 to 25% sitting in cash on the sidelines, ready to take advantage of any dips in the market. And right now I have I'm right in line with that 20% because my Facebook puts are expiring worthless. So that's going to free up like 75 grand worth of cash. So, I'm following those cash levels to the T right now just because, we never know when that next pullback is going to come and I want to be prepared for that. So that's what we're doing right here. Let's go ahead and jump into the stocks that I purchased this week. A couple of them are earnings plays. And one of them, the first one is HIMS, okay? HIMS has gone through quite a significant amount of volatility, okay? Whether it's the GLP-1 compounding lawsuits that were coming out, right? And then getting thrown out by the judge. HIMS has withstood that. HIMS has also withstood, earnings that weren't quite as stellar, kind of dropped off a cliff here, right? They've also withstood FDA warnings, which was issued after the Super Bowl. So there's lots of things that HIMS has had to go through, but fundamentally, this is a very sound company, okay? PE ratio at 73. It's a high growth company, so I don't expect it to be in the 20s or anything like that, but it's below 100, and that's what I like to see on high growth companies. The chart is upward trending. That is something that is crucial when selling options or doing the wheel option strategy, which I talk about on my channel. If you don't know what that is, there's many tutorials on my channel. That's what I do primarily. But this is the type of action we want to see. Kind of a big range of consolidation here, okay? So this is kind of what we saw back here before making new all-time highs and back here before shooting up to new all-time highs. And that's kind of what I expect from HIMS going forward. HIMS is a very, very strong stock, and I do believe they are a major market mover as far as being kind of the Netflix of healthcare, the Amazon of healthcare. This is a game-changing company. So I do believe in them. I really like their CEO. Their fundamentals are great. Cash on hand is great. So we're seeing a lot of bullish momentum here. We aren't overbought on the RSI. We had a RSI bullish crossover here. And MACD is showing some good momentum to the upside. So what I did this week, let's go ahead and take a look at the portfolio. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. But if we go into the account, you can see that I added actually 4 more cash secured puts this week, okay? And basically, let's go into the account. The total position, I brought the total position up to 6 figures. So we're at 118,800 worth of cash secured puts to collect about $5,400 for October. Now, what I would do this week, or this next week rather, is I would probably go out to the end of October. There's a lot of implied volatility here in these options. So, something to be taking advantage of. So I would go out to the end of October, and to play it safe, I'd probably go somewhere to like the 50 strike. I already have 50 puts, okay? So I like the 50 strike. So I'd go back to the 50 strike, collect $220, which is a potential 4.96% ROI. Obviously, results vary there, but I like that. I like those returns, and it's a 24 delta, so it has a good chance of expiring worthless. Worst case scenario, if the stock goes all the way down to 50 or lower, I will be forced to buy 100 shares at 50. But if we take a look at the chart, okay, I look at it as discounts, all right? So from current highs all the way down to 50 would be about a 14% discount. So that's amazing on the stock, right? Because if I believe in it long term, I want to buy it at lower prices, all right? And from all-time highs, all right, that would be about a 28% discount. So really liking HIMS here. It is heading towards that upper Bollinger Band, so it would be best to get it on a red day, but if you're bullish long term, I think the 50 strike is safe. That's below this middle Bollinger Band line and below the 50-day moving average. So really liking HIMS right now. The premiums are excellent, and you could get very far away from where the stock is currently at. The next stock that I added this week was Celestica. Wonderful chart, wonderful fundamentals. If you look at the chart on this thing, look at that chart. Upward trending, sure, dips, little crashes here and there, but upward trending. That's what we want to see on a chart when we're running the wheel option strategy, or we're selling options, or even buying the stock, right? You want an upward trending chart. It could be the greatest company, but if they don't have an upward trending chart, that's not going to help us make money, right? So here on Celestica, I sold some more puts when it dipped down here. That would have been a good LEAPS buying opportunity. I didn't get in, but I did sell some puts. So we're not overbought on the RSI. We're definitely below that upper Bollinger Band, kind of at the mid Bollinger Band line. So it's a perfect kind of entry point. And I'm going to show you what I did. So let's go to the positions, and you can see my position on CLS is now pretty significant, pretty substantial. 154,000 in cash secured puts. All right. And I have the 220s, the 210s, and the 225s. Today, or actually rather yesterday, I added the 210s. Okay. So why did I go out to October 31st? So that is actually earnings week. Earnings week, implied volatility is 81%, as you can see here on the right-hand side. Plus, the expected move is plus or minus 50 for earnings. So the stock could fall all the way down to 193, let's call it, or it could go up to 293. So you do have to be aware of the expected move. But for me, I'm fine owning it at 210. So I went out to this week, and I went to the 210 strike, and I picked up, let's see, I'm actually up on these a little bit. So I picked up a little bit more, but if I were to sell those today, I would have picked up, let's just say $975. That's a 23 delta with a potential ROI of 4.87%, which obviously results vary based off of where the price is at. But that is a wonderful premium there, right, for earnings week. So I really like the 210 strike. I'd probably go back to that one, or I'd even go up to the 215 or even 220 because I already have the 220s and pick up a potential ROI of 6.25% for earnings, okay? So that is a wonderful ROI there, and I really like Celestica in the portfolio. It's a strong company, good moat. They, create many of the electronics for data centers, the switches for the data centers. For instance, they made most of the products for the Xbox 360 way back in the day. So they make a lot of, they assemble the products and manufacture these products for these huge companies. So I love how they're in the AI space, but they're not directly, creating chips or anything like that. They are just creating some of the hardware for the data center components. So I really like Celestica, wonderful stock in the portfolio. And I think right now is a good time to kind of get into those 210s because, 210, if assigned, right, from all-time highs, let's just take a look, that would be about a almost 20% discount, okay? From current prices, that's about, 14% discount. So not bad. You're able to get far away from the stock and collect a decent amount of premium there, which you typically don't see in these types of stocks with low PE ratios at 51, okay? So Celestica was the second position I added. Wonderful company, good fundamentals, upward trending chart, great premiums. The next one I added was SoFi, all right? SoFi had a nice little pullback here, which gave us more opportunity to just sell more puts, okay? Every time it does that, every time it comes down to this like mid Bollinger Band, wonderful entry. So, we'll go to my position. You could see that I actually rolled the whole position out to next month for earnings, $161,000 worth of cash secured puts at the 26.5 strike. Okay, now you could get even better entry than me potentially on Monday. Okay, October 31st, implied volatility 73% plus or minus expected move of $5. So by earnings week, we could see this, if it's trading at this current price, we could potentially see this stock at $22.95 or upwards of $31.95. So not a bad entry here. But I probably, to be safer, if I were to get back in, I have the 26.5s, totally fine with that. But, I'd probably go for the 25.5s, collect $121, which is a potential ROI of 5.05%. Results vary based on where the stock is at. So I like that. Really, really good ROI there. So very good. And also, if you look at where that is, 25.5 all the way down here. And if we kind of take that from all-time highs, that's about a 16% discount if assigned on this stock, okay? Now let's talk about the two LEAPS opportunities, because these are always fun, and I know you guys like when I talk about LEAPS. LEAPS call options are definitely higher risk, higher leverage, but I'm very, very cognizant and careful with my entries on these. That's why in my group, Options Trading University, my clients get real-time call-outs, right? Like right when I enter, I type it in the chat. I'm like, hey guys, this is exactly where I entered, where the stock was at, how much I paid for the call option. So make sure to check that out if you're interested in those call-outs. But Amazon is at a wonderful discount here. Amazon is one of those solid companies that has so much growth potential in the future. PE ratio is at a low for the year, I believe. Yeah, 33 PE. And it's trading at the lower Bollinger Band, kind of hovering right above the 200-day moving average. So you don't see this too often on Amazon, but this is actually one of the companies that I probably use every single day, whether it's watching Prime or ordering on Prime, right? So I love Amazon, great fundamentals, upward trending chart, great premiums, and earnings are coming up. So what I did here, all right, we're gonna go to the portfolio and I actually purchased some LEAPS, all right? So we entered, let me see where my Amazon position, I have a very, very, very big position on Amazon, okay? I upped this to 180K in cash secured puts. I went at the money, in the money, like I'm okay getting assigned in the 220s because I think it's going much higher. I think it's gonna pass 240 by earnings. So that's why, I'm gonna get assigned on these three cash secured puts at 225 today. But I bought the Jan 15, 2027 200 calls. All right, I'm already up like, 0.83, but I plan on holding these until at least 10 to 15, maybe 20% next week. And if I grab that, if I hit those numbers, I'm gonna close it out. But, we went to the options chain. I went out very far in time, Jan 15, 2027, just in case we have a black swan event or anything like that. I'm gonna have plenty of time to be right. And I went ahead and picked one of those, or four of those up, each for, about $4,800, okay? So that was a 71 delta, $4,800 versus 22,000 to buy 100 shares, which I'm already doing. I'm gonna be buying 300 shares today, technically, and then on Monday, I'll have those in my account. So yeah, we're just kind of loading up the boats on Amazon right now. Great LEAPS opportunity because it is at the lower Bollinger Band. So the probabilities of it going back within these Bollinger Bands is about 95%, okay? When it pops out, it's about a 5% outlier move. It's a 2 standard deviation move, which means that, only 5% of the time Amazon is doing that. As you can see back here, it did it and then went back up. So I'm kind of expecting that. And if it doesn't, if it goes a little lower, that's fine. We got decent entry, but I am expecting kind of a recovery from here. At least if it does go lower, it'll probably bounce off that 200-day moving average. So yeah, that's kind of the move there for the LEAPS. And with the cash secured puts, we're trying to get assigned for earnings, which are, I think, the week of October 31st. So let's talk about the next LEAPS call option opportunity, which is actually Meta. Meta is approaching the lower Bollinger Band. I'm gonna wait until for next week. If we could get somewhere between let's just call it 729 and 735, okay? If we could get to this range, I will go ahead and purchase the LEAPS call option and I'll shout it out in my group We'll grab that and then we'll ride that back up to, you know, somewhere between 770, maybe even 780. And that'll be a fun one because I do think Meta is at a discount right now, currently trading at a 26 PE ratio. Bearish momentum on the RSI. Looks like, you know, bearish momentum on the MACD. Looks like that could happen for another day or two. So hopefully we could get an entry there. And if we go to the portfolio, okay, you could see that I have the Meta 740 puts. They're expiring worthless. Going to collect this whole 1,999 in premiums. And then on Monday, I'll have this 74 grand in cash to go ahead and allocate to some LEAPS on this stock. So I think I'm going to go ahead and do the LEAPS, or to be a safer play, right, I might go to earnings week, October 31st, and just grab the 720 or the 730 puts, which are paying out a potential 3.4 to 3.9% ROI on Meta, okay? Results vary there. But if you enjoyed this video, if you enjoyed this update, make sure to hit the thumbs up button, and I'll see you in the next one. Take care.